If you're shopping for a home right now, you've probably had this happen. You find a house that you really actually like and the location works, the layout works, maybe it's even in your price range. But then you look at the kitchen, you look at the roof, the flooring, and immediately you start thinking, okay, this is gonna need another $50,000 after I buy it to get it to how I really want it. And for most buyers, that's where the house gets crossed off the list and is done for good. Because coming up with the money to buy the house is already hard enough. Coming up with another $30, $40, $50, or $60,000 to renovate it afterwards usually isn't realistic. But there's actually a mortgage program built specifically for this, and it's called a renovation loan. And the basic idea is pretty simple. Instead of getting a mortgage to buy the house and then figure out how to pay for the renovations later, you combine the purchase and the renovation into one loan. So let's say you find a house for $250,000. After walking through it with a contractor, you find that it needs about $60,000 worth of work. Maybe redoing the kitchen, replacing some flooring, updating a bathroom or two, replacing the roof. Maybe the HVAC is even outdated or needs a little bit of tune-up. Instead of needing $250,000 for the house, plus $60,000 sitting in the bank for the renovation, that becomes part of the mortgage. One of the most common ways to do this is with an FHA 203K loan. If you've heard of an FHA loan, you probably know of it because of the lower down payment. A 203K loan is basically FHA's renovation version. It allows you to buy the house and finance approved improvements at the same time. And this can be completely done without having to change the way you shop for a house, because most buyers are looking for the exact same thing. They want move-in ready, they want the updated kitchen, they want the new flooring, the fresh paint, and they don't want to deal with a project. But those are normally the houses that everybody else wants. But renovation financing lets you look at houses differently. Instead of saying, do I love this house today? You can start asking, could I love this house after I fix a few things? And sometimes that opens up completely different groups of homes. Now, there are two different versions of an FHA 203K loan. There's a limited and then there's a standard. You really don't need to memorize the names. The simplest way to understand it is that a limited is more straightforward, non-structural, more cosmetic. Things like kitchens, bathrooms, flooring, HVAC, windows, paint, similar things. And the current limited program allows up to $75,000 worth of renovations. That number is important because you'll find a lot of outdated information saying about $35,000. Scratch that, that's outdated. Then you have the standard, which is getting into bigger projects. Think structural work, foundation issues, moving a load-bearing wall, or adding an addition, more substantial renovations. Those projects require more oversight and have a different process. But here's what I really want you to understand. The goal isn't to turn you into an expert on different versions of the 203K loan. That's my job as a lender. Your job as the buyer is to understand that if you find a house that needs work, don't automatically assume you can't finance it. Before you cross that house off the list, figure out what work is going to cost and whether these programs could make sense. Now, there's another misconception I hear all the time, and people think that renovation money gets handed directly to them. It doesn't. If you have $60,000 of renovation work included in the loan, you're not walking out of the closing with a check for $60,000. That renovation money gets held in escrow and the contractor gets paid as approved work is completed. That's called the draw process. So let's say the contractor completes a phase of the renovation, that work gets verified or inspected as required, then money is released to the contractor. And this is why choosing the right contractor really does matter. You need somebody who is not only capable of doing the renovations, but somebody who is also comfortable working with a renovation loan. They need to understand paperwork, they need to understand inspections, and they need to understand that they're going to be paid through draws rather than treating it exactly like a normal cash renovation. The lender matters a lot too. A lender being able to do an FHA loan does not automatically mean that they have a lot of experience with renovation loans. There are a lot more moving pieces. You've got the renovation escrow, you've got contractor documentation, you've got inspections and draws, and on certain projects, you may have to have a 203K consultant involved as well. So if you're considering doing one of these and you want the lender, the real estate agent, and the contractor to understand what kind of transaction they're going to be working on. Because a loan itself doesn't actually make it that difficult. It's when somebody involved doesn't understand the process. The other thing that you need to understand is timing. A renovation purchase can take longer than a normal purchase because you're not just being approved as a borrower. You're figuring out if the renovation, we need to know the scope of the work. We need to know the contractor information. The appraisal has to account for the property should be worth after the approved improvements are completed. And underwriting has to review the project. So if you're making an offer on a house, your agent needs to know from the beginning that you're using renovation financing. You don't want to promise the seller an unrealistic closing date just because you're trying to make the offer look stronger. The other thing I like about these loans is that they can solve a lot of property condition issues that would otherwise be a problem. Maybe there's peeling paint, the roof needs to be replaced, or maybe the furnace isn't working well. On a normal transaction, you might need to get into a situation where somebody has to make those repairs before the loan can close. But with a renovation loan, the entire purpose of the loan can be to take care of those approved repairs after closing. So the condition of the house isn't always a reason to walk away. Sometimes it's actually the reason the renovation loan makes sense. Now, I'm not saying everybody should go buy a fixer-upper. Some people absolutely should buy a move-in ready house. If you don't want to deal with contractors, renovations, inspections, or projects after closing, that's completely fine. This probably isn't the loan for you. But if you keep looking at homes in your price range and thinking everything I can afford needs work, then that's when I would at least look at this option. Because the answer may not be saving another $50,000. The answer may be changing how you finance the house. So when you're scrolling through homes and you see the ugly kitchen, the old floors, the house that clearly needs some love, don't immediately swipe past it. Ask a different question. What would this house look like after the work? And then find out if the numbers actually make sense. Now, if you have a house in mind and want to know whether the renovation finance could work, then reach out to me and my team and give us the purchase price and tell me what you're thinking about changing, and we can start figuring out whether a renovation loan makes sense for that property, or if maybe it is better to stick more to a traditional financing. At least you can get the real numbers and understand what it looks like. So if you have more questions about this, like I said, reach out to me or my team, and we would love to help walk you through it.